Time for stocks on the editor's radar then. And let's begin by talking about Dixon Tech in greater detail. After their numbers, we also spoke with the management who was talking about, Nikunj, how mobile revenue is going to really shoot up and there's a lot of opportunity. How do we compare Dixon Tech to some of the other manufacturers?
Avan, 2 years ago, what happens to defense manufacturing? 6 months ago, a year ago, what happened with railway manufacturing? I think next 1 year will happen with electronic manufacturing. They are talking about aggressive growth in FY24, and it's a very, it's a low margin but a high turnover business. They did have a cyclicality in the business, and markets thought that the business is not linear, it is a cyclical business, but they are talking about that growth is actually making a comeback. Now, why do we have Dixon back? Because if you frankly look at all the stocks right now in last 6 trading sessions, Dixon in a sense still has scope to catch up. It has still scope to catch up with the Canes and with the Surma. See, this entire pack is going to be hunting together. And growth, when it comes back into a large sector where you know that the size of opportunity is very large, always leads to re-rating. So Dixon was a halo stock immediately after COVID. Then it lost its mojo because of volatility in the numbers. But now the management is sounding confident, which is certainly going to go down very well with the investors who in a sense have written off Dixon. So this, I think, if you ask me, could really be the next pot of gold. The problem is valuations. But if you're looking at 3 years out, what is looking expensive today will actually look cheap when you look back.
Okay, so I think you should take note of the fact that Nikunj said it's going to be a pot of gold when it comes to the sector as a whole. Let's move right on then and discuss the next newsmaker, and that's Metro Brands. It was a bit disappointing when it came out with its numbers, the higher ad spends, the Cravatex loss as well impacted a bit. Of course, we'll be speaking with the management later to get it in a little more perspective. But Metro Brands, your views?
Markets knew that this has been a tough quarter for consumption. Yeah. Now, one side is luxury, and Metro Brand is not luxury in my book. It is actually semi-luxury. I mean, the luxury category in India is very different than what Metro Brand represents. It's a fantastically run company. Because the P multiple of Metro Brands is high, in the near term, it will lead to re-rating. But on a 15-20% decline, you want to go back to a company like Metro Brands. Maybe not today, but maybe on a bad decline, a bad patch of the market when there is a rainy season, literally speaking for the market, not for Mumbai monsoon, that's the time you want to buy into some of these stocks. I think the word valuation in a company like Metro Brands should be ignored because these are businesses which have a very long, runway, so to speak. Their focus on cost management, I think, is very efficient. This brand is built and it's here to last. We've seen an extraordinary rally in some of the footwear stocks same time last year. I think that kind of a rally is unlikely to make a comeback. But let's say on a bad patch, 750, 725, 820, 700, that's the time you definitely want to be a buyer in Metro Brands.
Okay, so Nikunj giving his technical expertise also there. Those are the stocks, Aisha, on the editor's radar.